All right. Tuesday, the 27th of December, 2016. Starting off with retail. I talked about retail last week with my little lip pattern. It got me thinking a little bit more that outside of the seasonal, uh, you know, uh, selling retail into the holiday season, Black Fridays, because that's when retailers go into the black. They spent the last 11 and a half months, 11 and three quarters, in the red. Okay. And then we looked at, Yum and the wings, and, restaurants are having issues. So I think the consumer's having some issues here. They may be holding off to see how our new POTUS treats us in the first quarter. Usually they start with domestic issues first and then deal with foreign later, because they're always thinking about re-election after they get elected. So here I just ran a scan for retail, and I want to see if we're having some breaks in here. This is a Titan 30 index, just Dow Jones here. Basically poked its nose through over the summer, which is usually a weaker time for retail because everybody's at the lake. In Minnesota, 1 in 3 owns a cabin. All right, comes down, trades up, and here we are at all-time highs again in some of the indexes, and yet the retail couldn't hold out. It's basically had a sideways pattern. I mentioned that Amazon from the high to the recent low is down 15%. We got a bounce on Monday on Amazon. But like I said, Amazon will go the same way that other retailers do. They have it, right? The ball's in their court. They expand, and then the recession comes through, and then they have to deal with that. My concern here with the retailing is going forward, because when I went back and looked at previous highs, retailing led the way. We saw Constellation Brands, which is alcohol. The average American consumes a 6-pack of beer a day. They're telltale signs. The thing is, it's kind of like on the way up to the 2000 peak. It all happened in the NASDAQ, where the New York Stock Exchange had actually issues started trending lower. We're raising rates, and the dollar's going along with it, pretty much hand in hand. The first couple of quarters here are going to be interesting with earnings, because they'll start blaming the dollar for their issues, because 95% of the world is over there. So here's retailing, okay? Also, if we're going to do the old tariff thing, tit for tat, we're going to lose out on our cheaper imports that the masses can afford to purchase. Okay. So here's retailing basically sideways on this one here. If it cracks the lower end here, I also saw, let's go down a little bit further. Okay, let's do this one here first. Okay. So here I have unbalanced volume on this here, okay, with the retailing. Basically, these are weekly, so this is 2015, 2016 food and drug retailers as a whole, right? So here it jabs through the bottom. It should springboard the other way. That's what it should do. But look at the amount of volume on here. Okay, this kind of got my interest. Now, we do have seasonally where things kind of thin out, and these mutual funds, they have to be indexed basically, so they have to come in, and then things are adjusted in the first quarter. I sent out the IWM, but there's a whole bunch of shares outstanding that were birthed. Voila, shares. The open interest picked up, right? So a lot of people bought the IWM, right? So there's a whole bunch of shares that were created. Same type of deal here, but what I notice is I go through all these other indexes, a whole bunch of these, and this goes back. I mean, you can see some seasonal here where you get some spikes. A spike here, and here's it dropped off. But December it got some spike, but this is pretty huge here. Okay, so to me, obviously somebody or some bodies are getting out of the retailing. And if you go back and take a look at previous times for the retailers here, going into 2000, they basically started falling apart in 1999. Okay. We did have some pretty goofy stuff that we were purchasing besides the Beanie Babies and that on the way up to it. There's always some sort of fad that goes on, and I think probably Bitcoin is our fad now. Retailers fell apart here going into 07. Same type of deal. It marched up after breakout. It lasted 1, 2, 3, 4, 5 months, and then rolled over into the spring. So here's basically the same thing. You know, the amount of, I mean, you look at the volume move on here. I have to lean that their body's getting out. Come to think about it here. Did they take the volume from all the exchanges? Let me take a look here. Grr. I hate when things change. Yeah, they did. All right, so blah. All right, so here's a daily on it. Skip the unbalanced volume on here. What they started doing is they took the exchange, the volume from all the exchanges on here instead of just the New York Stock Exchange, wherever these are traded, if they're traded overseas, what have you. So that's the spike up in the volume here. Okay, so skip this one. So much for footsteps in the snow. But here you can see where it banged off of the previous, which was support, now is resistance. Okay, and retailers, you know, made in China, made in Japan, made in Indonesia, made in Thailand, made in Taiwan, made in Bangladesh, made in, you know, if we're going to play that game, then it's, you know, we're going to have to go back to made in America, but with a strong dollar, you import stuff. That's how it goes. It's cheaper for us to buy it overseas than it is to produce it here, because that would cause inflation if we had to purchase the stuff domestically here. All right. Plus, you also have to get everything tooled, right? You just can't whip out a factory overnight. All right. So the retailing here basically is what I'm looking at, is that a lot of these retail indexes have kind of stalled out and rolled over. Okay. So retailing is 70% of the economy. Same type of deal again here too. You know, we'll just say it's weather related or whatever, but like I said, Amazon's 15% off the high. It's bounced some, but it's the same type of deal. It's 70% of the economy. You know, if you know, you're not, it trickles and it works its way through the economy. Same type of deal. Here's food and wholesalers. This would be like your Cisco and things of that nature too. Same type of deal. Lots of sideways on here. Okay. Same type of deal. Here's general retailers where they poked its nose through and had a reversal. Okay. Basically, a lot of these, just draw your trend lines on here. It's tougher and tougher for sectors for right now. Basically, the ones that are moving are the ones that are supposed to be moving in this type. It's going to be your banking, your financials and stuff, and your business services, your smaller growth companies. We're at that phase of like the late 90s again. Okay, we're seeing it with semiconductors, right? You know, unfortunately, people like Intel aren't leading the way. We have others, but you know, you can see these that they kind of have that rollover look to them. We're long in the tooth on this move. Remember, we're talking 08, 09. U.S. apparel retailers. I mean, this is the holiday season. Pop down. Same type of deal here. Broad lines. You know, we're back to the whole triangle type deal. Pennants. These are usually continuation patterns, but I'm going to deal with these as secondary distributions. Okay, so you have your move up for the year, and then a pullback, and then more distribution before rolling over. That's how I'm leaning towards a lot of these here, because it is tough. Here's drug retailers, right? We're not going to have national health care. Somebody's going to have to pay for this. And it's probably not going to be the Department of Defense. Ew! So, you know, there's, you know, Americans usually do the right thing after a while, you know, but we'll eventually get our act together here. So, It's just a lot easier just to implement it and get it out of the way. But we're a capitalist type deal. We're supposed to be making money off of the sick and ill. I go, what was it? 5% of the people that use hospitals use 50% of the services. So I mean, things. I'm not. It's here nor there, but when you look at the big picture. So in theory, right, those people are the ones that should pay, but just it makes life a lot easier when you don't have to worry about any of that. Same type of, you had, here are peaks again in 15, this is the drug retailer. So this is going to be like your CVS and all those fun ones, Walgreens, things of that nature. Here's retail REITs. Okay, so same type of deal. REITs are you're getting competition with would you rather buy a REIT or government paper? Well, government paper might be at an issue here too down the road. America was what was it? We were a debtor nation until before World War I. Then after World War I, we were a creditor. And then we were a creditor until 86. And so we owe more. What's that Foghat song? Live now and pay later. That's down the road, that we always talk about kicking it down the road, kicking the can down the road. But the deal is that we're going to have to get it from someone, and we're going to try and get it out of the student loans, and we're going to try and get it out of taking it out of Social Security, and we're going to try to it's those that already have it are setting the legislation for those that don't have it, and of course those that don't have it are the ones who are making the widgets, but that's here nor there. All right, so retailing REITs, just a bad sign here. The whole deal with interest rates and all of it, just REITs are going to be in bad shape here going forward. Basically, I'm just treating this as a pause. I thought we'd get some sort of bounce here. We'll see over the next couple of days if stocks crack from their highs here, and we get people that run into debt for the first quarter or two. The dollar, what's it, 103, the low end I think is 102, and then 105, 106 is the upper end. It's just we're not moving rates sharp enough to have the dollar take off. It's anticipatory. So for right now, it's if retailing's on hold and housing is beginning to soften and lumber's falling apart. And, it's a seasonal thing, too. Not too many homes are being built in December and January. We may be getting a stall, so we might not be moving rates as quickly as possible. But if the weather turns out to be nasty, I noticed that oil companies and exploration are beginning to stall. Oil products like heating oil and especially gasoline broke out to the upside. And natty gas on the distant contracts are kind of frothy, but I'll do that in another video here. The deferred like October. So it's one of those, if you want to get into natural gas, you may just wait for October of 17 to roll over here. Same thing. Here's the retailers, especially. I'm sure this is probably your Tiffany's and all that fun stuff here. Poked its head through and had to pull back. It needs to have the follow through to continue on. But I wanted to see retailing index. Okay, so this is a lower high, okay, after a period of sideways. Okay, back, I think in 2000, and then retailing peaked out before the rest of the economy. Okay. The stock market, as they say, is a wealth creator, and people they feel wealthy, and so they go out and indiscriminately spend on stuff. depending upon, what the numbers are coming in here, you probably want to watch what the red book, I think it is, for how retailing's working out. Plus, you once again, the baby boomers, the largest segment. Their garage is already full of stuff that they purchased in the 80s and 90s. They're done. And then you have your millennials and stuff, certain segments where they're not. You have some, we'll say the girls are buying, nails and hair color and all this other fun stuff, where the boys probably aren't buying. It's kind of like guys, garages full of tools. How many of those out there have a garage full of tools versus those that don't? But it's there, things go in cycles. Same thing here with the retailer here. We tried to make another swing, failed. But I'm going to be watching the retailers closely here because of if we are beginning to see some faltering here. I mean, maybe Amazon is telling us something, right? That's Amazon's a pretty good deal here, where you can, that's you follow Amazon, and then you saw Federal Express and UPS, and they're all chained together here. Same type of deal, a lot of sideways here. If we do get some tax breaks, it will filter through. But we're looking for the velocity of money, how quickly you get it and spend it. That's what we're looking. We're looking for signs here. On this, the spending's actually going the wrong way. There should be actually a pickup in spending, and we'll see as the earnings start rolling through here. Here's Intellidex index, dynamic retail, whatever. Same thing, peaked in 15 and rolling over. Okay. Food and staples, same type of deal. We're also getting, some commodities, we're not paying X amount for bacon anymore, or for butter. That's the other thing with the strong dollar. We end up having to consume it. We don't export it. We begin to start importing things like, beef from Mexico and New Zealand and things of that nature. It's all because our export, we actually have to consume. So we divert our exports like copper and stuff into cars and houses. We pretty much have a system to the madness of the U.S. economy. It's pretty much planned out how it's supposed to work, a decade at a time. Okay, here's another one. Retail and Industries Group, S&P 500. Marching along, but you can just feel it. It's having difficulty here, continuing on. Let's see here. Retail index, same type of deal. Pokes its nose through and comes back down. And that's the other thing too, is higher interest rates mean that retailers are going to have to float their supplies, their stock, at a higher rate, right? If you have to, if you buy something in January to fill the shelves, and your flip is only twice a year, that kind of thing. Swimsuits and stuff are coming in now, and they're going to have to sit at 4% instead of 2%. So you run into those issues too. India one. What's this one? Retail fund. Okay. Retail group. Where are my indexes? Is that it for the indexes? I guess it is. These are all retail funds. Yeah. We got a reversal here. London. X5 retail group. And we have bodies in there for you folks in England here. This is a weekly, so it pokes through. You're getting a series of, you're getting one green bar and 3 undecided bars. So you're running into issues here too with the bodies in it. They bought the breakout, but you have your sideways action, you have your breakout. Okay, then they buy the pullback, they push it again, and then all of a sudden it's beginning to wane. Okay, I think Fidelity Select Retail. Okay, so Fidelity, here we go. So we have a sideways, you're working on a double top type of issue here. You can see your momentum. These are logged charts. So you can see, your movement's been going on, and now it's kind of stalling. What's this one? Treasury Retail Index. All right, so these are treasuries. Yeah, okay. Oh, that's a good one. Small cap value fund retail. All right. Trying to see what we have going on here because like I said before in my other videos, you march on at a 30 degrees or 45-degree angle. You go sideways. It's a coil tightening. Then you work on your breakout, and then it's at a very steep incline. And it's my concern is is this the last hurrah? You have a lot. I mean, they were scrambling to get in. They just could not wait to get into this thing. This one's falling apart. Something fierce. Retail properties. This is London. That's not. Well, maybe that's dividend payments, but that's kind of ugly looking there. Where's Brexit? Here's Brexit. Boy, that's an awful one. All right, I think that's it for my indexes. I must have sorted these by indexes. And then national retailing. Here's one. This one looks like a bear flag here. Those are retail REITs financial, same type of deal. If things go soft and the shops start closing, but this looks like a bear flag. NNN here, all the way back down to here. What's this? 26. So from 42 to 26. I can't see. It does. It just looks like a bear. Here's your trend. It broke the trend. It came down. This is your bounce. Now this is basically your bounce with debt too. National properties. Here's a short. Same type of deal. This is our twist. This is our issue with twist. Took off, but this does look like a bear flag here. More of the same. NNN. All the ends. All right. Just kind of going through here. Retail index poked its nose through. This is the bull. Same type of deal. Bull, you get the full reversal on here. Okay, so you have the retail here. Unbalanced volume, you can see that they're in there. Poked its head through, had the reversal. Basically, I'm looking at this as any type of bounce on here as a short on this retailing index. Seasonally, retailing begins to suffer here in February. The bills come due and things of that nature. You can see that for the bulls, it definitely has to hold, we'll say, the 32 to 34 area. But, they're facing interest rates, and if we do the tariff deal, we're going to have issues with, with the imports, because a lot of our retailing stuff are imports. Same thing with REITs. They're going to have difficulty here with the higher interest rates because of there's competition for return, just like with utilities. They say U.S. debt is risk less, but we shall see going forward. Different rhetoric in that department too. Same type of deal here. This just looks like a bear flag on here. With the retailing, with this REIT here. Let's see here. Same type of deal where it peaked out in 2015. Same type of deal where it poked its head through, couldn't hold the breakout, gave it another go at it, and it's having a tough time here too. Yeah, a lot of these are having a tough time here. The retailing peaked, same type of deal. Peaked, larger bearer flags on both of them. This, like I said, I treat this as like a secondary distribution. Same type of deal. More distribution here. So it does look like retailing is going to have a difficult first quarter here. All I know is I had to go to the store on Christmas Eve. Toothpicks. The flat ones weren't acceptable. Round. Okay. Retail Me Not. I believe that's an online here. That one's been trending lower for a while. Specialty retail. Wow, we found a winner here. This one's still holding on. Galaxy. State Street Retail REIT. That one poked its head through. That one's marching on here, going along with the market. And Galaxy, I'll have to go search out that Galaxy here. They look to be having some decent funds. They must have decent managers there. This dotted line here is R2. So basically for the year, went from S2 to R2. Talked about that before. These are pivots for next year. Okay, on here. If the market does continue higher, treat these as in play, because at the end of things, the zaniness begins to hit. Just like you saw in dry, same type of deal. This looks like a larger distribution here. And I'll give it one more go here. This one poked through. Institution Equity Index. Okay, so this is kind of a nice one to follow here to see how the institutions are doing with their picking. High yield. Sideways to down on this one. India. This looks like a distribution here. Cracks this. A lot of air underneath. Gabelli tried to run with it and didn't make it here. This one worked. Ran into R2. I just, like how I said it, I'm leaning that we're near the end of some, that's the whole thing of raising rates. So we run it into a recession so we can drop rates and that. And, the elites, they love it when we hit a recession because they can go shopping. They sell everything, they mark everything up and sell it on the way up and then buy it back at a discount on the way down. XRT. Oh, it only took forever to get to this one. Okay, so the same type of deal here where we peaked out in 15. I think I want to go back on this one to a monthly. All right, so retailing here peaked out, just a basic trend line here. Same type of deal. You can just draw a trend line underneath this here, but it does, you're looking at it on a monthly basis. It does look like distribution. And quarterly. See if I can get 2,000 into this here. No, doesn't have 2,000. Retail. Let's see, where was I? XRT. Same type of deal here. Like I said, this just looks like a distribution pattern here. Working on a bear flag. So that's retail. So basically, it looks like retail peaked in 15. There were some that moved through it. REITs are having an issue basically making bear flags, walking hand in hand with interest rates. But, you can use Amazon as a gauge. And like I said, Amazon, 847 to 710, and we're getting a bounce. We're back to the triangle deal again, pennant flag, however they're looking on your charts. I'm treating this as a distribution pattern. It just looks that way. You have you give it another shot, doesn't hold, comes down basically sideways. We did get the bounce up today. They said they sold the best ever. Well, they're in the wrong position to be having the best ever, right? Best ever season. And, that's how I look at it, right? If it's going to be the best ever, shouldn't it be up at the hurrahs? If this is the best ever and it drops 15%, I can't wait to see what's in store. And like everything else, they all they can't go up forever. Let's see here. Where's a monthly Amazon? One logged chart on this one, but like I said, it's, I'm treating it as distribution. They have warehouses full of stuff, so they can run into problems too, where they have a whole bunch of stuff that doesn't move, things of that nature. So that's retail. All right, time to go into Natty Gas.